Good morning, everybody. I'm Nicola Barrett, Chief Corporate Learning Officer at Emory Executive Education at Goizueta Business School. Wonderful to have you. And what a week it has been. Anyone paying even the slightest attention to the news knows about the run on Silicon Valley Bank, now in the hands of the FDIC. This happened on the heels of another Californian bank's voluntary liquidation. That was Silvergate Bank, a bank that was heavily focused on cryptocurrency. And then was followed by another crypto-focused bank, Signature Bank in New York City. These collapses are the latest in a string of other dramatic events in the crypto space. The prominent cryptocurrency Luna and its sister stablecoin UST collapsed. FTX and many other platforms filed for bankruptcy. Sam Bankman-Fried was arrested, and the price of Bitcoin went from an all-time high of over 65,000 in late 2022 to a recent low of about just below 16,000. So what does this all mean for us personally and for our organizations? To help us with these questions, I'm excited to welcome Matt Lyle, Associate Professor of Accounting. Matt holds a PhD in mathematical finance from the University of Calgary and joined the faculty at Emory in 2022. His research interests are in valuation and value investing, and more broadly, how to connect fundamental analysis with quantitative analysis and machine learning for prediction and decision-making. I was told that Matt grew up in northern Alberta, Grand Prairie, where almost every year for a while, the temperature would be below minus 40 degrees Celsius. Matt, you've been feeling like the weather here in Atlanta is pretty balmy for the last few days when the rest of us are all rugged up because it's been got down to freezing.
The first time in my life, I felt like I haven't really had to experience winter. So after I left,
the rest of us cold-blooded people can't wait for summer.
Yeah, when I first left Alberta, I went. So I do have a mathematical finance degree from Calgary, but after that I did I did my PhD in management at Toronto. So when my wife and I moved to Toronto, our first year there, we were like, this is tropical. That's Toronto. And ever since, we've been slowly making our way down south.
Way south.
Yeah.
Well, before I hand things over to you, Matt, I do want to highlight an opportunity for the people and our Business Over Breakfast regulars to dig deeper into a recent BOB topic, which was on generative AI. Based on the energy that we had from the session that David Schweidel ran, we've asked David to run a 3-part interactive webinar series starting April 14th, focused on generative AI, ChatGPT, how you use AI for content marketing, image generators, and the like. It's going to be an interactive webinar series. It does have a price tag, but we've priced it at a very easy to make a decision price. So please take a look at we'll put it in the chat for you. There's one caveat, we do need a minimum of 20 people to sign up for it to make it work. So I'm hopeful and enthusiastic that the folks that come to Business Over Breakfast will both appreciate this opportunity to dig deeper into how to think about and use generative AI and as well as being able to pull out your credit card. Don't tell the dean about the price though, will you? Keep it a secret between us. Now I'm going to hand over to Matt. As usual, he will spend about 30-35 minutes sharing some insights He does welcome your questions, so please put them in the chat or the Q&A, and Tammy and I'll do our best to get to all of them either during the session or straight after Matt's finished with his deck. Over to you, Matt.
Okay, thank you very much, and thank you for asking me to be a part of this. So how this started, we've begun to answer or offer a new class that I'm teaching right now, called Blockchain and Crypto Assets. And the Business Over Breakfast team reached out to me and asked if I would present something on this. And I said I would be happy to. So the way I'm envisioning this, it's my first time doing a virtual presentation in a while, is I'm going to try to do it like I would do in the class. And a lot of the content that we're going to go through is actually stuff that we talk about and have talked about in the class. So I'm going to ask some questions and kind of try to go through a brief overview. It's not possible to go into all the nuances of the things that go on and exist in the crypto space, but hopefully some of these questions and the overview will help some of you who are not that familiar with crypto to at least maybe start to have it seem a little less mysterious, if that might be possible. So the first question is anybody on right now that has purchased or traded in some sort of crypto? So you can put that in the chat. So we got
quite a few, Matt.
Quite a few. Okay, so we might have some experts online. Okay, so I'm going to go into some other questions, and I actually taught the class on Tuesday, and I said I was going to do this, and I said, you know, are there some questions I should ask? And these questions actually came from the students. And then once we get through that, I'm going to talk about FTX, and when I say SBF, this is Sam Bankman-Fried, and I'm going to try to go through a history, a brief one of what happened there, and the ultimate, collapse of something that a lot of people were very excited about, and try to see if there was something unique about it happening in the crypto space, or if it's actually something that we've seen in the past, or similar to something we've seen many times in the past. Okay, so the first question, what is Bitcoin? So you can throw whatever you want out there. Nicola, if you can grab some of the answers, and then we can kind of maybe discuss them.
So nobody in our audience knows what Bitcoin is? Come on, guys.
Nobody knows what Bitcoin is?
Imaginary money, says Randy.
Imaginary money. Okay. Any other ones?
Cryptocurrency, digital ledger.
Digital ledger.
Asset secured by POW algorithm. Monopoly money.
Monopoly money. POW stands for proof of work. So that's
okay.
right. Secured by proof of work.
Bitcoin,
any other?
Distributed blockchain, crypto, first crypto.
Okay, first crypto.
Gold. Fool's gold.
Fool's gold. Okay. So we got a few things. The next one then. What is a blockchain?
Digital public ledger, says Eric.
Okay.
Greg,
a ledger.
Ledger.
Digital ledger.
Mm-hmm.
As opposed to one that pencil and paper. Segmented data storage. I wish I was a programmer to understand the details. Okay. Digital chain of custody.
Custody. Mm-hmm.
Lots of things. Okay. Third question. What is money?
Something I don't have enough of.
Okay.
Paper note. Fiat currency, trading vehicle, a mutually agreed form of value.
Okay.
A fiduciary based on trust, a promise that can purchase goods and services, a promissory note for trading, a magic trick, says Terry.
Okay, a bunch of interesting answers. Okay,
Mhm.
so I mean, these questions might seem weird. The last one, though, is actually, I believe, quite important. And when I first started preparing to teach the class and started to try to get a better understanding of crypto, this question of what is money kept on popping up. And you really can't avoid it, I don't think, if you're going to try to understand at least the fundamentals of why some of these cryptocurrencies, or if we even talk about Bitcoin, might exist and why some people originally got excited about it. So I'm going to start with that one. And in my opinion, when we ask this question, it's actually a complicated question. So I think in large part, at least in the circles I run with and have for my entire life, we often take money as given and just is, right? So I have money, I want money, I can use money. But if you say, what is it? Often the answer is just, it's money. Like it's just there. But there's something else to it. And really, it's quite interesting. And those of you who haven't ever kind of examined or kind of looked at the history of money, I found it fascinating when I went through. And it's something that's essentially unique to human beings. And it's a human construct. And we've used many forms of it over our history. So just out of curiosity again, does anybody have any idea of what forms of money have been used over the years? And we can go back many, many years. Stones, jewels, notes, bartering, shells. Okay, a lot of things. So this is just one example. There's many others, and I'll talk briefly about them. This would be an example of commodity money. So commodities such as salt, tobacco, cloth, among many others, have been used as money at times in history. In China, North Africa, and the Mediterranean, humans used salt as commodity money for a long time. This picture here is are like blocks of salt. And one of the things, as you start to think about stuff like money, is we tend to gravitate towards something where we can have a standardized unit. So these sort of blocks would represent some sort of hopefully standardization with respect to the quantity of which we're going to exchange. And in this case, it would be salt. And salt has actually played an important role in our history, and it pops up. So I didn't know this until I started going through it. The modern English word salary, like the salary I get paid, is derived from the Latin word sol, meaning salt. So there is nothing that formally stipulates what should or not be money. Any person choosing to purchase something, not for its own sake, but with the aim of exchanging it for something else, is basically viewing that something as money. So there's been many forms. Many of these things I actually saw in the chat. Cattle, salt, seashells, stones, silver, copper, gold, and government issued paper.
Matt, just
Yeah.
an interesting comment that Dana put into the chat, which said, and it's like, not worth your weight in salt now has meaning.
Yeah, that's worth your weight in salt. Yeah, I suppose so, because I've heard the term not worth its weight in gold. but yeah, that does give it context for salt. Okay. Now there's quite a bit that goes into this, and we spend a few classes actually in the course I teach just on try to wrap our heads around this idea of money. But as you get into it, there's generally three sort of attributes. It's a medium of exchange. So what that means is that basically you are just using this item. So you're only grabbing or collecting it or exchanging something that you find valuable for it, only to use it to exchange for something else. Now, if you think of what we normally think of as money, it's quite useful, right? So we can exchange it for actually anything that somebody's willing to sell. So it's a medium of exchange. The second thing is a unit of account. Now, what this kind of means is that we're able to price or denominate everything else in terms of it. So I have here a cup of coffee costs $2, so I don't go to very expensive coffee places. If you go to a more expensive one, maybe it's $6, but we can think in terms of dollars, and that allows us to easily compare across different goods that we might buy or sell. This takes widespread adoption. So we have to collectively, as a society, agree, this is this social construct or social contract, that we're willing to use this as a medium of exchange, and there's enough of us that say, yeah, that we can actually start to then denominate things with respect to that particular medium in which we're going to use to exchange. The last thing, a store of value. It maintains its purchasing power across time. So this is an interesting feature of what we think money ought to have. And if you think about what has been going on over the last, I don't know, basically since the end of 2022, as the Fed has been trying to fight what we call inflation. So that's the erosion of our purchasing power across time. So this is actually something that's talked about a lot within the blockchain and crypto space. And if anybody's ever heard of Michael Saylor or watched some podcasts or anything like that, this type of thing, purchasing power and inflation, comes up a lot. So Michael Saylor would be an example of a Bitcoiner, somebody who's very bullish on Bitcoin. So what is Bitcoin? So Bitcoin is meant to be a peer-to-peer payment system without a centralized, trusted third party. Okay, so that's all it's meant to be. So that leads me to this next question. What does peer-to-peer mean? And do we have this in our current day-to-day lives without Bitcoin or any other cryptocurrencies for that matter? Okay, so what does peer-to-peer mean? Any thoughts? Human to human? Yeah. Okay, so peer-to-peer, we don't have to go through anything or anything. Can we do this as of right now? Ignore Bitcoin and cryptocurrencies of that. Can we actually do it today in the world in which we are used to operating in? Nicola, let me ask you. Do you think, can we do this? Can we do this peer-to-peer? Like if you want to send somebody
Sure. Yeah.
money? Yeah?
Yeah.
Okay, how do you do it?
We agree what we're going to pay one another, and either hand over the money, do a handshake, hand over the money, Venmo, whatever.
Okay, so gotcha. So where this is definitely possible is in person. So I give you some sort of, I give you a $5 bill, and that's directly peer-to-peer. Now, if we want to put distance where we don't have face-to-face, I'm in Chicago, for example, maybe you're in Atlanta, and I would like to send you some money. So we could use something like Zelle. So I have a question. I now have a question. Is that something Zelle, or is that an example of peer-to-peer?
Well, Eric says no, because when I said Venmo, he said Venmo has an intermediary. So everybody's saying no.
Yes.
Yeah.
So Eric's right. So even though it seems peer-to-peer, right? So I'm going to say, please send $5 to Nicola. Zelle. Zelle will say, okay. And then what happens is behind the scenes, there's going to be a centralized ledger, so database, that has information about how much money I have stored somewhere. And it will say, okay, I'm going to look there. Oh, check the box. And then I'm going to transfer from that centralized point to Nicola. So it has to go through somebody or something else. So that's why it's not peer-to-peer. And this is what the centralized third party, essentially all of the things that we're used to transacting with outside of face-to-face requires some sort of centralized third party. So when I get paid from Emory University each month, they don't pay it directly to me, right? It goes to a bank. A bank is always involved. After it's there, then I can access it, but Emory doesn't pay it to me directly. And even if they wrote me a check, in order to actually use that check of some sort, I would have to go somewhere and have it exchanged for cash. So there's always like a centralized party that's involved. So this is where Bitcoin came in, is it wanted to try to come up with some sort of technology really that would allow for peer-to-peer payments. So Matt sends something to Nicola without being routed through something centralized. Okay. What is a blockchain? And a bunch of you guys mentioned things that are very similar to what I have on here. Often when this term is mentioned, the meaning is about a public blockchain. There's also private blockchains, but I'm going to talk about the ones that would kind of be underlying things like Bitcoin or Ethereum. So at its heart, a blockchain is just a database, nothing more. It's a database and it's collecting information. A public blockchain, such as Bitcoin's blockchain, represents a particular special type of database. One, as a number of people said in the chat, it's a ledger, just like in accounting courses. So we're keeping track of kind of who, even though we don't know for sure, owns what, and where the asset is with respect to ownership. It is distributed. So what that means is the copy of the ledger of who owns what is on many computers worldwide. It's decentralized. So this contrast, and it's very important relative to the centralized third party, this is decentralized. So no one person or organization controls it. Now you can argue about whether that's actually possible in reality, but that's the idea. Another thing, it's permissionless. Anyone can join or exit the network without having to ask anyone else for permission. Okay, so with that, are there any questions so far on these types of concepts?
Nothing's showing up in the chat at this point, Matt.
Okay, good stuff. All right, so why was Bitcoin invented? I don't know for sure. The inventor's names is Satoshi Nakamoto. Nor am I aware of anyone else actually knows who Satoshi Nakamoto is. There's speculation. Part of this is it's actually quite interesting because it adds some mystique, some mystery, I think, around Bitcoin. If you actually read the original paper that was published by Satoshi, and you look a little more at how Bitcoin works, it's incredibly impressive, the solution that this or a group of people that went by the name Satoshi Nakamoto came up with. But anyway, my guess on why it was invented. So solving the peer-to-peer without a trusted third party is a non-trivial task. So if you go through and you try to think about how you would actually send, say, something from Matt to Nicola, and then remove that centralized third party without things falling apart, it's a tricky exercise to solve. So my best guess is that it's related to the long history of governments continuously debasing forms of accepted money. And if you actually study the history of money, this comes up time and time again, and this is related to inflation. So governments would be a centralized authority that have a monopoly on issuing money. And what's happened many times in the past is they effectively print a lot of money, and this destroys the purchasing power and is often associated with collapses of empires, Rome, for example. So Bitcoin came to life shortly after the financial crisis of 2008, and there's something called the Genesis block on Bitcoin's blockchain. And in there, Satoshi has something to say about a bank being bailed out in Germany on that day. And many say in response to government intervention and the bailing out of banks. And if you go back to the financial crisis, there was a lot of anger amongst people for what seemed to be, or what a lot of people interpreted as bailing out institutions and people that took on risk, and they benefited where other people lost a lot. So I think that's kind of the genesis, or the motivation for why Bitcoin was invented, but I don't know for sure.
Matt, there are a couple of questions in the chat. Alicia asks, where is the ledger created? And then Carlos asks, who pays for the maintenance of the software?
So where is the ledger created? The ledger was created, this Genesis block. I mean, the ledger is, everything's all digital. So it's just ones and zeros, and it's stored on computers. So the code was written, a group of people along with Satoshi worked on writing the code. All of this is open source. You can see it. You can just look up Bitcoin code, and all of it is completely open source. So the people that built Bitcoin, which is really code, they volunteered their time. They were, I think, enthusiasts. I assume very smart enthusiasts, but enthusiasts nonetheless. And through that code, they created the environment that allows Bitcoin to be what it is. So where is the ledger stored? The ledger is stored on computers all over the world. So that's the distributed nature of it. And then what was the other one, Nicola? Or I hope that answers the question on, where is the network, or where's the ledger stored, I think, or created?
Yeah. And then who pays for the maintenance of the software?
No one pays for the maintenance of the software. If there's going to be an update, and there's some tricky things about this, but if Bitcoin code was, say, going to be upgraded, there's basically kind of a vote across the community. And that vote happens with adoption of the proposed upgrade. But this is all volunteer time. Because it's decentralized, nobody's paid for their effort. The idea with this, or with people putting in efforts to make sure that the Bitcoin network is secure and the code is bug-free, is that you have a vested interest in Bitcoin. That's no different than Ethereum or a lot of other things. That by virtue of, say, holding Bitcoin or being a part of it, you're incentivized to try to ensure that, if you think of it as a money system, your money system is healthy and strong. But there's nobody to pay anybody for maintaining Bitcoin's code. Do you have any other ones, Nicola?
No, I think that's it for the time being.
Okay. Okay, so there are many other crypto assets besides Bitcoin. Ether, so ETH, ticker symbol, This is the second largest in terms of market capitalization, but there's many others. So I have a question. What would be the difference, or does anybody know the difference between, let's say, Bitcoin and Ethereum? And why were people potentially excited about Ethereum, even though Bitcoin did come first and is considered, kind of the king of crypto?
Bitcoin is proof of concept, perceived value. They're on different blockchains.
Mhm. Yeah,
Ethereum was the first decentralized computer, says Eric.
I see.
Ethereum is much more fluid, says Mohammed.
Okay, so this is in
And
my
Eric
view,
says Ethereum can run code, so smart contracts.
Eric has it. So
Eric has it?
yeah, I mean, there's other, but that I believe is why people were excited about it. So Bitcoin is designed just to do basically what I wrote before, and I just took that from Satoshi's paper. It's meant to be a peer-to-peer payment system, or the ability to transfer wealth from one account to another without a centralized trusted third party. Ethereum in many ways is similar, but it wants to do more. So this is one of the things that is actually quite cool about the space, and there's a lot of innovation. Is that a young man named Vitalik Buterin, I hope I pronounced the name correctly, DB, was one of the people that came up with this. And this is kind of what Eric said, a decentralized computer, allowing something to be on chain, on a distributed ledger, where everybody can see it. People can come in and out, but you can actually do things on it, like write code, which allows for a lot of the things that we now hear about if you follow this stuff, such as NFTs. NFTs and other applications are not really practical on Bitcoin's blockchain. Ether changed that. And
Angie, I think can you go on mute, please, Angie?
okay, so let me just check the chat here. Okay, so I think most should probably know who this young man is with the cool hair. That's Sam Bankman-Fried. And FTX collapsed. So I want to ask this question: Is crypto a scam? To the participants. Ricky says absolutely not. No. Okay. Most of the things I've seen, unless, do you see something else, Nicola? Seems to be no.
Everything can be a scam. Crypto has a low watermark to start. It can be, depends on the crypto being set up. No more than money is a scam. Can be. So we started off with a bunch of no's, and now we've got a bunch of maybes.
Okay. Well, let's go through this particular example, then we can kind of talk about it. Is that Nicola? Can we? I
think it's Angie. I'm going to try and get her. I'll call her and see if I can get her to mute herself.
Okay, she must have just kind of forgot it that she had it off mute. Okay, so FTX, and there's something, if we're going to talk about FTX, called Alameda Research, and I'll get to why this is kind of important in this, I don't know, investigation of whether crypto is a scam. There's other examples, but this is probably the biggest, and some would say is the most important as of recently. So FTX and Alameda Research. The man on the left is, as I said before, Sam Bankman-Fried, the person we've seen a lot in the news. And the lady on my right is Carolyn Ellison. So Sam was CEO of FTX, and Carolyn, also quite young, was the CEO of Alameda Research. And both of these two entities working together helped to generate the collapse that we saw. Okay, in early November of 2022, SBF's wealth went from around 14.5 billion to close to zero within a matter of days. The collapse of FTX, which had become the second largest crypto exchange in the world, collapsed. This sent shockwaves throughout the crypto, with a contagion spreading within an already battered sector. So those of you that have traded in or follow crypto know that it's been a tough year. Or 2022 was a tough year to be long crypto. How could this have happened? Perhaps crypto is a scam. But here's some background. So September 2017, Sam Bankman-Fried left Jane Street, which is a quant trading firm. He went there out of MIT. I think SBF, by all accounts, is actually a very smart individual. So he left this trading firm, and in November 2017, he co-founded Alameda Research, which I mentioned before, whose CEO, or where Caroline Ellison became the CEO of at a future date, which was a quant fund with a lady named Tara Tara and several others quit in April 2018, citing concerns over risk management and business ethics. In January 2018, SBF deployed an arbitrage trade using BTC. Now, for those of you that maybe have heard the term arbitrage but are not 100% sure what it means, this is essentially riskless profit. It's actually quite difficult to find in practice. SBF found it, and the way he did it was he would look across two different exchanges, or multiple different exchanges, let's say one in the US and one in Japan. And if Bitcoin was higher on one exchange versus another, then he would use the exchange where Bitcoin was low, buy it, and then send that exact same asset and sell it on the other exchange. So this is arbitrage, and he was able to deploy that and make some decent money doing so. In late 2018, SBF moved to Hong Kong due to a more appealing regulatory system. SBF founded FTX, this is short for Futures Exchange, in April 2019. And this becomes important in the whole saga. One of the original investors was the CEO of Binance, who is normally called CZ. Has anybody heard of CZ before?
Yep, Eric has.
Yeah.
Yes. So lots of yeses and nos. Mohammed says founder at Binance.
Yep. So if you get into the crypto space, CZ is a big name in the space because Binance is a big player. In 2021, SBF moved FTX from Hong Kong to the Bahamas. Why? Favorable environment. He and several coworkers, including Alameda CEO Caroline Ellison, lived together in a penthouse in the Bahamas. As of 2021, SBF owned approximately 90% of Alameda. So remember, he was basically the founder of Alameda. Alameda used FTX heavily for crypto trading, providing liquidity, and some claim using insider information to trade against FTX's own customers. So I want to take a moment on this slide and just think about it. think about what might be going on here. And then those of you that went to business school or have taken an econ class or two, think about some of the potential problems that might arise. So Sam, let's say he owns FTX, which is an exchange. He also owns Alameda. Somebody's said to be running it, Alameda, on Sam's behalf, Caroline. She lives with him. Alameda trades heavily on FTX. Does anybody see anything potentially problematic with this situation?
Seeing scam, conflict of interest, running from strict regulations. Wow, says Andrea. Insider trading.
So this presents an environment for a few potential issues. Conflict of interest, I think, is clearly one of them. So FTX, any sort of exchange, they're going to be able to see things that other people are not, because unlike a blockchain, such as Bitcoins or Ethereums, those are public. As soon as you send your assets to an exchange, just like when we send our assets to a bank, that they become a custodian. Okay, so we've handed over our money to somebody else, an entity. We do that all the time. And then we basically trust them with things because they can use that, and they have a bunch of information about the people that bestow upon them the custody of their assets. So when you give your assets over to exchange and there's lots of trading, the people behind the scenes can see kind of who's making what orders and placing what bets. Now, I don't know whether it's true, but some have claimed that Alameda was actually given special treatment, that they were able to access the platform at a higher speed, and also provided with information that should have never been disclosed outside of FTX about who was trading where, giving them potentially an unfair advantage over the customers that were actually trading on FTX. Okay, so Alameda started off low risk. So if you think of the term hedge fund, the hedge part means, you know, they're trying to, while still making money, reduce some of the risk through or when they make investments. And early on, that's what Sam's quant fund was actually trying to do, or was doing, low risk. They were hedging out risk while trying to make money. However, that began to change over time. And by the winter of 2020, Alameda was not so much a hedge fund as much as it used to be, but began to take on much larger and higher risk bets. So Alameda was making high risk, long bets across many, often illiquid projects in the crypto space, and using leverage to do so. So an example of this would be if you think of a startup or venture capital in a traditional sense, you have things like that in the crypto world as well. So suppose that you go and invest in a project, but part of the agreement, because the project is going to need some capital to get things going, is you're not allowed to withdraw your cash or your assets for, say, 2 years. Okay, so they'd be doing, amongst other things, things like that. And they'd also be leveraging up because we were very bullish. So that leverage was collateralized with digital assets such as FTX's own token, known as FTT. I'll talk about this briefly on the next slide because it's important. So FTT played a critical role in the unraveling. So I just want to see if anybody's heard of this. So what is FTT? Does anybody know? And I'll talk about what a utility token is shortly.
Not seeing any answers yet, Matt. Oh, yes, here we are. FTX internal utility token.
Basically funny money.
Funny money.
What?
Stable coin, question mark?
Not a stable coin. So yeah, as I have up here, as Eric said, it's a utility token. Funny money, but
Gary,
some people.
Gary thought it was a florist.
So Eric, some people might ask you back, what type of money isn't funny money? But so FTT, there's other exchanges out there that have this, is something that is produced or created, Michael Saylor would say, out of thin air by the exchange itself. So those of you that the arena in the West Coast, named after this exchange, crypto.com, they have a utility token. That token's called Crow. Now, what these do is, if you're going to trade on a platform or partake on a platform, you have to pay fees. Exchanges are, at least in theory, supposed to make most of their money through fees with trading. So the more you trade, the more they kind of skim off the top, and they're providing a service. So it's not like you're not paying for nothing. So they get these fees. But we don't like paying fees, because why would we want to pay anything more than we have to? So this is where this notion of a utility token comes into play. If you held this token FTT on FTX, it would give you some benefits. So one of those benefits, and this is just an example, suppose you said, I'm going to exchange some of my Bitcoin for FTT. You get this FTT. If you hold it on FTX, then instead of, say, paying 0.3% every time you make a trade on FTX, you might pay 0.25% or lower. And then there was other deals where if you would lock it, so basically you would agree to lock it on the exchange for an extended period of time, the benefits keep going up. So that's where the utility from this token would come from. But it's basically all tied to the environment in which the benefits come from, which is FTX. This is kind of like airline miles and things like that. They have some value, but they have somewhat limited value because you kind of have to operate within their system. So here's where the unraveling starts to begin. So FTX is doing very, very well. Their token, FTT, because FTT is tied to FTX, and people believe that FTX is great and Sam is a golden boy. So things are going well. And then something happened. And if I had more time, I would talk about the Luna and UST collapse, which I think was really the start of a lot of other things that happened, because there was so much invested in that blockchain and the ecosystem that was Terra. Anyway, after that collapsed, crypto started to spiral and things started to fall apart for Alameda. Notice I haven't said FTX, though it took a while for this to come to light. According to Wall Street Journal, after things started to fall apart with Alameda, FTX, let's call that SBF, allowed Alameda to use FTX customer funds to help pay off their loans. In early 2022, CoinDesk released a leaked Alameda balance sheet. And where does lots of this information come about crypto come from? Twitter. So this is a screenshot from Twitter. So this was posted, and this was some good detective work by CoinDesk. So they gave a snapshot of Alameda's balance sheet, and those top two items there, FTT and FTT. Remember what I mentioned, what FTT was. It's a token issued by FTX. Lots of people have it held on FTX to accrue these benefits. So it's essentially not liquid, because there's not much floating around. If you have some money, you can actually impact the price if you toss a bit of money at it. So what's our Alameda's balance sheet look like? Over 5 billion in FTT, more than 2 billion of that as collateral. So it's already spoken or being used. It's basically not liquid. And 3.37 billion of other crypto assets. So this comes out, and by virtue of being disclosed on Twitter, everybody knows about it. And here comes I would say, the final blow. CZ, the CEO of Binance, and I mentioned at the beginning as we started talking about FTX that CZ was an initial investor in FTX. So as time went by, CZ and SBF had a bit of a falling out. I think because FTX was getting quite big and potentially becoming a realistic competitor to Binance. So CZ tweets that he is selling all of his FTT that he received when Sam Bankman-Fried bought CZ out, so that CZ was no longer a part, at least directly, of FTX. Now, what do you think would happen if a big name like CZ tweets that he is dumping all of his FTT? Well, I mean, I think it doesn't take much. People get wind of this, they probably start to panic. And what happens? You never want to be the last one holding the worthless token, so you try to sell. FTT's price starts to collapse, and well, so did FTX, Alameda, and SBF, for all of us to see. So it collapsed. It's still ongoing. SBF is, I don't know, having to testify. There's lots of investigations going on. So this brings me back to kind of the question I asked before. So was FTX's collapse because of crypto and blockchain technology? Greg says no.
I think everybody's saying no. Behavior, says Andrea. Greed, says Randy.
Okay, so I think I agree with you. It's not, in my opinion, it's not crypto. It's not blockchain. Those are technologies. Just like money is not money in a traditional sense. When a scam happens, it's not because of money. It's because of us. We do it to one another, and we have been doing this for a very, very long time. And that's why we have things like, so I'm not the biggest on regulation, but there are things like when you have an exchange and a hedge fund, and they're basically one and the same, there's problems that can arise. And there's regulation around that, where you build a wall and you say, that can't happen because the temptation to use assets inappropriately is just too high for many human beings to resist. Okay, so this is just to finish up. So because the accounting and internal controls, which is an old concept that we teach in business school, is actually quite important for incidences just like this. So poor at FTX and Alameda, it is taking considerable effort to understand fully what was going on behind the scenes. So John Ray, who's taken over, he was the person that helped to deal with the bankruptcy that was Enron, which was a very big bankruptcy. I guess it's been some time ago. And I took a few quotes here. He said, there was a complete absence of trustworthy financial information. In my view, the blockchain and the whole system around Bitcoin and other, I think, robust ecosystems is about establishing trust. You have to believe in the technology and the system in order to see, having this agreement that the actual cryptocurrencies themselves have value. Never in my career have I seen such a complete failure of corporate controls and such a complete absence of trustworthy financial information as occurred here. From compromised systems integrity and faulty regulatory oversight abroad to the concentration of control in the hands of a very small group of inexperienced, unsophisticated, and potentially compromised individuals. This situation is unprecedented. Okay, so I think with that, I've gone probably close to over time, Nicola. So that's, I believe that, again, like I said, it's not blockchain, it's not crypto, it's human behavior, just operating in a different space.
Thanks so much, Matt. I'm going to hand over to Tammy.
Tammy, you're on mute.
You're on mute, Tammy. We're having some problems.
Sorry. Yes. Thank you, Matt. So much great information. Really appreciate it. I'm going to stick to the banks. But based on what happened with Silicon Valley, I might be digging some holes in my backyard. Burying money there. So thank you again. And thanks everyone for joining. So just a look ahead at upcoming webinars, April the 6th, Empathy, Unlock Innovation for Customers. Join us to hear Scott Sanchez take on that. And then again on April the 20th, a transparency statement improves interactions across power disparities. And Professor Andrea Dittman is going to share her research insights on that topic for us. And as always, wanted to share some featured short courses with you. As Nicola mentioned, we do have our Making Generative AI Work for You. This is going to be a 3-part webinar series taking place on April the 14th, 21st, and 28th. Hope to have you join us there. As Business Over Breakfast audience, we are giving you a special pricing for that. And as Nicola also mentioned, we do need 20 people to move forward with this program, so we hope to have you sign up. We also have Executive Communication and Leadership Presence, which will be taking place in person at the Business School, April 18th through the 19th, and AI and Machine Learning. This is a full 2-day short course. April the 24th and 25th. And then for those who are really interested in developing your leadership, for women's, we have our Goizueta Executive Women's Leadership Program. This is a hybrid model that's taking place in person as well as virtual beginning April the 15th. We are open for applications regarding that. So if you do have any questions regarding this or any other courses, please feel free to email us at goizueta.emory.edu/executive education or email me at tammy.long@emory.edu. Thank you again for your time. Thank you, Matt, again for all the valuable information and sharing of blockchain and cryptocurrency. We hope everyone have a great rest of your day. Thank you again for joining us. Take care. Bye-bye.
Thank you.